Jacob Willoughby, Vice President Research at Red Cloud and Analyst here. And I'm very, very pleased to be joined by Andrew Pollard, who is CEO. I had the good fortune of having a webinar with Andrew and his chairman last week. So I'm at least up to date on this story, but I'm excited for you all to hear the story from Andrew. So Andrew, I'll let you take over from here. Thank you.
Well, Jacob, you can never know too much about our story. It's rapidly evolving, but it's really good to be here. It's nice to have you and 200 of your closest friends in my living room right now. For those of you that don't know, we're traded under the symbol BRC on the venture, and we're also on the OTC under BKRRF. Forward-looking statements for investors, lots to look forward to. I'm one of the largest investors, and the reason behind that is because of a news release we put out last week. Drill hole number 1 into our Tonopah West project in the heart of Nevada hit 3 different veins, but one of the veins was about 30 meters thick at averaging about 1 kilogram silver equivalent. That's what that does to a stock chart when you hit 30 meters of about 1 kilogram per ton silver equivalent. In fact, this chart's already outdated. As of yesterday, we hit $1.42. We've pulled back a little bit. The thing to understand when you hit something like this is that all of a sudden, all the warrants and options that were in the money, or that weren't in the money, all of a sudden are, and you're seeing a ton of liquidity come in. So since last Monday, we traded something like just under 20 million shares across all exchanges. But you know, as I said, one of the best parts is that was only our very first hole. We had to release that as it was the definition of material, and you can tell the exact time we got that back from the lab, because about 2 minutes later is when I called the exchange to halt our stock. So who is Blackrock? Listen, we're focused on Nevada. We've got 2 projects. If I had to put them together, I'd say that the similarities are we're focused on big grades and big ounces. I'm going to spend all of today talking about Tonopah West because this is a silver summit, and this is also the project that's really being the dark horse of the industry as of late. One drill hole added about $100 million to our market cap. And as I said, I think the best is yet to come. What is Tonopah? Well, Tonopah, we are the largest claim holder, and we control more than half of the Tonopah Silver District. The Tonopah Silver District is one of the largest silver primary districts in all of North America. Something unique about it is that, well, I mean, for any of you invest in silver companies, you'll know that generally it's a byproduct of industrial metals like base, like lead, zinc, copper. We're a pure play precious metals district. Generally, you'd have to go to Peru or Mexico or Yukon or Alaska. We're halfway between Las Vegas and Reno, and we got the highway going right across our property. Tonopah was quite storied. It was discovered in 1900, literally by a prospector and his mule. So we're talking about the era of mules and pickaxes. And it was the last district scale discovery prior to World War I in Nevada. They say that, well, obviously nowadays everyone knows Nevada as for gold and the Carlin, but back then and to this day, Nevada is known as the Silver State. And that is because of the Comstock lode and because of Tonopah. Tonopah is only second to the Comstock lode in historic silver production. So we're the first group to conduct modern exploration since production really shut down in the mid-1920s and early 30s due to precious metals prices going off a cliff. We control half of this district, and effectively it's an east-west trending district. The discovery was made on the east side of town, and then they didn't drill it back in the day. They found outcropping veins at surface, and they mined these veins right from surface down along strike and down dip, and everything went west. So the west represents the blue sky of the district. Now, one of the most unique things about the district is also the grades at which it produced. Over about 30 to 50 year production profile. The bulk of production was done over 30 years, but there was some small scale stuff done other. But over that production profile, it averaged over 2 kilogram per ton silver equivalent through in terms of head grade. So this is an ultra high grade precious metals district in the heart of Nevada. This thing was a monster. It was one of the most significant precious metals districts in the U.S. Between, say, 1900 and World War I. And that's because it produced up to about 450,000 ounces per year in gold equivalent. So it was, yeah, it was a big boy. This is Jim Butler and his trusty mule. He's the guy who discovered the outcropping veins at surface. TONOPAH, as I said, what makes it unique is it's a silver primary district, but it's 100-to-1 silver gold ratio. That's quite unique in that nature. It's very rare, as I was saying, as silver is a byproduct of generally of base metal mines. It's hard to recoup if silver's going to go on an absolute tear, and it looks like it's going parabolic as we speak. Those base metal mines can't scale up their production to recoup that silver credit. They have to sort of follow what's going on in the lead or zinc or copper space, and then they might get lucky and make a bit of extra spread on the silver. With us, we're a pure play silver district, and it's 100-to-1 silver to gold. So it's something that should be really, really appealing to a lot of the big boys. When I say this is one of the most significant precious metals districts in the U.S., back 100 years ago, that's not me saying it. This is a newspaper clipping from around 100 years ago, literally saying it's one of the greatest mining districts in the nation. Why is that? Here's the production profile. The red chart there, the red line there indicates the average ounces produced from a gold equivalent basis. And it's sort of like a 20th century, early 20th century history class, because effectively what you'll see is production peaking right before World War I, and then starting to tank soon thereafter. Effectively, it started getting mined pretty much the year it was discovered in 1900. And then as the east side of town really got going, production really ramped up to over 450,000 gold equivalent ounces per year. You'll see it start to taper off around 1915. That's when most of the mines on the east side of town really started getting mined out. And then all of the emerging mining companies started moving west, because the west represented the blue sky. You'll see the next big drop-off coming around World War I. In a span of maybe 4 or 5 years, silver prices went from $1 an ounce down to 35 cents an ounce. So all of a sudden you start to see the business of mining emerging. Some of the another interesting thing on the graph here is the blue and the gold lines that represent silver equivalent and gold equivalent grades. You'll see when production first started, it was producing at over 10 kilogram per ton silver equivalent. And that was because of the supergene enriched nature of the veins near surface as they started mining them. But on an average basis, it was nearly, well, it was over 2,100 grams per ton silver equivalent was the average over 50 years. So they say that silver districts aren't discovered, they're consolidated. And this is just as much a real estate play as it is an exploration play. The secret sauce behind what we've been able to do, and the reason no one's probably ever heard of TONOPAH before, unless you're in the business, is because our 90% of our property package is patented claims, meaning they're privately owned. Back, 120 years ago when it was discovered, there were limits as to how many how many claims groups could get their hands on at the time. There were dozens of mining companies operating here. There was many mines in production. And really the secret sauce over the last couple of decades have been private groups going through the painstaking process of consolidating these individual packages of claims. We acquired TONOPAH at February 24th. I remember it because the day we announced it was the day the World Health Organization came out with their first worldwide health emergency order. That sent the Dow going to the worst day on record. It was soon followed up by many others in quick succession. We announced this deal, and when we announced it, it was bringing together all these different colors of packages of claims together for the first time ever. It completely missed the market. We certainly weren't going and banging the drum after that because of what was going on with COVID, but it was a big deal. No one's had this consolidated package of claims before until us, and this gives us some of the most prolific producers in the storied region. And as I said, we've got the west side of town. The east side of town is actually covered by the town, as you'll see. So the west, that's where everyone set up shop, and then they followed it west. So we're drilling right now, as you saw in that one of the first slides there. Hole 1 was into target 1, the Victor target. So 3 of these 4 targets represent past producing mines. So we're literally trying to breathe life into 3 past producing mines in 1 round of drilling. We nailed it on our first one. We're not starting with a clean piece of paper here. We've got access to all the underground workings in terms of the maps. We know the grades they were producing. We know where the veins were. We know the grade, the strike, the dip, everything. Literally, we're just setting up shop right where these miners got turned around when precious metals prices took a big turn. Victor was our first target and our first hole we drilled, because when they stopped mining the Victor vein, and it was one of the most prolific producers in the region, they mined it down to 1880 foot level. When they stopped mining it, it was 24 meters thick, the vein they hit. We were telling people that we're expecting to hit something about 24 meters thick. No one believed us. We hit it, first hole. They got turned around in the mid 1920s because actually they encountered some water down at that 1880 level. It's not much water, certainly by today's standards, but back then they were using electric water pumps. The pumps did the job just fine. It's just electricity wasn't all that reliable in 1920, and it caused rolling brownouts and blackouts. So this same company went and started mining the second target, which we've completed some holes in now. The second target represented the last production in the district. And if you'll see, we actually outline our tonnage projections on all of these. And I'll tell you what, on our first hole, we were correct on how we nailed it. If you see target number 2, we think there's about 3 times the potential tonnage in target 2 than target number 1. Target 2 would probably account for 40 to 50% of the total ounces on our property, if we're correct. It's the big kahuna. We finished 3 holes into that so far. We mentioned in the news release that, you know, in my quote at least, one of the most significant things of that original news release about the discovery hole wasn't the grade and the intersect. It was the fact that we'd completed 6 holes, and all 6 of them seemed to, the vein system seemed to come back as predicted. It looks like we're hitting this thing out of the park here. Obviously, assays are pending, and we're not sure what's going to what the grades will be like. But the target number 2, they mined down to the 1650 level when the company ended up going belly up due to precious metals prices. So we're literally drilling into past producing mines here. Target number 3 was a new discovery made by Core Mining. They had a portion of our package 2 years ago. It had none of the brownfield targets that we're drilling into, so they were left to make a grassroots discovery, and they did. They hit 2 veins. One of the veins had 700 grams silver and 9 gram gold, and the other vein was 1.5 meters thick, and it had roughly 10 gram per ton gold equivalent in it. So here's a section of the Victor target. As you'll see, Site 1B represents where hole 1 was drilled from. That's all those black dots represent the historic workings. We literally just set, we did a vertical hole right on top of where the miners left off, and they got turned around by the water. We drilled straight into that bad boy, and that's where we hit that 29-meter hit. We also found 2 other veins, which we weren't expecting. One of those both veins were 3 meters thick. One of them was 2,100 gram per ton silver equivalent. The other was about 465. So those are a couple nice surprises. We've got 2 other drill holes that we put into there, testing the down dip extension of that. And also we're drilling across it as well. So hole 2, we're trying to get a sense of the true thickness. And hole 3, which is also pending, is testing about 171 meters down dip extension of that, which is represented on there. As I said, target number 2, we've drilled 3 holes into. They mined this area down to 1650 foot level. Historic records indicate they expected that to go much deeper. In fact, they did development work on this target. They just never got around to mining it. So from our perspective, this is another exploration target that we see as sort of fishing with dynamite. And here's the new discovery that Core Mining made 2 years ago. They actually left the district because they acquired Northern Empire, and they're probably kicking themselves for it now. But here's the grades they had. These are near surface. We're going to be following these up. 2.5 meter hits, 20 gram per ton gold equivalent, and 10 gram per ton gold equivalent. Once again, we think we know what's going on there, and we're lighting it up. You know, another interesting thing, as I said, you know, early on, was that news release. Not only did the stock chart go up like this because we hit, but it also captured the attention of Eric Sprott, who approached us the very next day, who's probably the world's biggest silver bug. And we're closing a financing with him. He's leading it with a $5 million order, and we're getting $7.5 million into the kitty, which should close this week if the exchange allows. And then we've got assays pending. We've expanded this initial drill program. We've completed 8 holes now. And we've got a core rig coming to site to keep targeting that Victor vein even further down, because core allows us to go deeper than the RC drill rig allows first. So here I'll pass it over to Jacob, and hopefully there's some questions.
Okay, we'll try and keep this quick because we've got about 4 minutes. So first of all, deal closing hopefully Friday.
Yeah, that's it's all subject to the exchange, and if we get all the I's dotted and T's crossed, but it should be Friday or Tuesday, I'm hoping.
Excellent. So next press release could be.
Yeah, listen, we've got stuff in the lab. When you're doing a financing, you sort of build this big wall, so we don't have access to anything. That said, we weren't planning on releasing hole by hole anyway, so I'm hoping if we can announce this either Friday or Tuesday, because Monday's a holiday, we might have results out either end of next week or early the week after if all goes according to plan. But we're making quick work of the drilling now, and as we're doing RC, it cuts the processing times down quite a bit from core.
Okay, and the cycle time on the holes is increasing because where you drilled the Victor was the deepest point.
Yeah, precisely. So our deepest targets were the Victor vein, because that's where the historic miners mined down the deepest. So we're literally just picking up right where they left off and then testing the down dip plunge from there. Target 2 is the second deepest target. We're through half the holes on that, I guess. We're going to sort of move the drill around. I think next up is target 3, the near surface one, which we can probably pump out a couple, maybe 3 holes a week on that. So, and then the fourth target's sort of, the Goldilocks zone. So we're picking up the pace now. That's for sure.
Great. And I think you said you've actually finished 8 holes.
Yeah. So we finished 3 in Victor, 3 in target 2, and then we drilled a couple into the core discovery area. Those were quite shallow. The drill shut down for a couple of days with the crew changing out and taking a bit of a break. But I think everything started back up as of this morning. So we're making good progress, and we've got a second core rig coming to site. I think in the next week or two. So.
And that core rig will drill the further down dip extension of the Victor vein?
Precisely, yeah. As I said in the news release, it looks like, we drilled 3 holes into Victor, and it looks like the vein system's coming back as modeled. So it looks like we've encountered some good stuff down there. So we're bringing in the core rig to keep it going even down further, because, people didn't believe us that we could get the RC rig down to, 2,100 feet or so, but we did that. But now we're going even deeper. So, we're the first group to ever drill this, and back in 1920 when they were mining it, technology's come a long way, so we're excited to see what the core has to say.
That's excellent. Now, Silver Cloud, maybe September timeframe?
Yeah, we're doing IP up there this week, I believe. We're doing a big IP survey to help refine some targets up there, and we've got 3,500 meters of RC drilling planned directly adjacent to the Hollister mine, where there's 8 veins outcropping and a mercury mine sitting atop of it. No one's ever put a hole into there. So Hollister is when it was in its heyday, it was one of the highest grade producing gold mines in the world. And yeah, we've got 8 veins that surface directly adjacent to where they mined up to our property. So that could be the icing on the cake here, but TONOPAH is the real value driver.
Yeah, we got about $500,000 left. And I just wanted to maybe get you to tell us a quick history about Silver Cloud. Why hasn't it been drilled before?
Yeah, well, it had 3 small rounds of drilling by Teck, Newmont, and Placer Dome in 3 different target areas. They cut gold in all 3 target areas, and then it was a victim of its own success, because the last real drilling was done in the early 2000s. Teck ended up leaving Nevada right after that. They liked the project so much that rather than give it back to the vendor, they slapped on their own royalty and farmed it to Placer Dome. Placer Dome hit gold in that. 5 meters of 12.5 grams, but they lost their budgets too because gold was tanking. And what happened there is Placer tacked on their royalty to it. For the last 15 years, it had a full 10% NSR until we came in and cleaned up the deal. Now we've got the cleanest deal that anyone's ever had on that. The royalties are effectively gone, and we're happy to pick up where they left off. It's on the largest gold mining complex in the world. So.
Thank you so much, Andrew. That's all our time, and we'll talk to you soon. Look forward to more great news.
Appreciate it. Me too.